Welcome back. Home prices are falling across Chicagoland, but it's not for the reason that you think. That's what we're going to talk about today. We're going to make sense of all of these doom and gloom and often conflicting headlines. Before we get started, though, we always want to let you know that if you like what you saw today, give us a like, subscribe, because we'll be back here next month. And most importantly, perhaps, a disclaimer. We are about to give you some numbers about the whole Chicagoland market, okay? Now, every single little sub-market, neighborhood, town, what have you, is going to be different within that market. So what I'm telling you today is going to apply to the whole market, but you might want to check and see what's going on in your neighborhood. For that, we've got you covered as well. Head on over to our website and fill out that form that says request a neighborhood report, and we will send you a handcrafted report on the neighborhood or town of your choice so you can figure out what's happening in your own backyard. All right, let's get into it. Today, we are going to be talking about why you may be seeing home prices falling across the Chicago area and why it's not as big a deal as you think it is. Here's what's going on. It has to do with seasonality. In the Chicago market, and in fact in the entire United States market, home prices are very seasonal. And a lot of people know this on some level, but I think we often fail to appreciate exactly how impactful this seasonality is on home prices. In fact, if you're a home buyer or a home seller, the time of year that you buy it's one of the biggest factors in how much money you save. It can cost or make you tens of thousands of dollars depending on how you play your cards. So today we're going to talk about that, how it affects the real estate market, and why it's actually probably one of the driving forces behind what you're seeing. If you're seeing a lot of price drops in your email inbox from Zillow or Redfin or what have you, that's probably why. Okay, so let's talk about seasonality. Some of the home statistics that you see are what we call seasonally adjusted. Some of them are not, okay? So Case-Shiller is a popular one. That one is seasonally adjusted. And if you look for the Chicagoland area, Case-Shiller home prices have continued to increase really since about 2012 or so, basically the better part of the last 10 years. They've done nothing but go up. But at the same time, that is adjusting for the natural fluctuations in the housing market that occur every year. So here's how it works. Every spring around, and by spring, I really mean January, February, March, buyers come out of the gates ready to buy. They say, this is the year that we're going to do this. Our lease is up in June or July, and we need to buy a home then. For that reason, there's the most demand for property in those months. And we see home prices, wait for this, sell for 10, 15, sometimes even 20% more for homes that close in June than homes that close later in the year. Usually November, December, or sometimes January is kind of the trough of that. So check this out. Here are median home prices in the Chicagoland area for the last 12, 15 years or so. Now this graph is seasonally adjusted. That means each data point is actually 12 preceding months worth of activity blended together in order to give us a nice smooth line. And that's really helpful because it tells us generally which way is the market headed, okay? It smooths out that seasonality of the market as best we can. And that's helpful, but it doesn't really help us appreciate how much prices change during each year. So check it out. Here's that same graph again, except this time we've removed the seasonality. Each data point is 1 month's worth of activity. Notice anything different? Yeah, it's a little bit more of a roller coaster. You can still see the same trend, prices generally heading up over the past 10 years or so. But this time you can see how big of a difference there is in sale price between June, that's the peak month in almost every single year except for 2020 and I think maybe 2014, it was July or August, and the trough, which is typically December, it's occasionally January or February. Now remember, every time you're looking at the peak and the trough, if the peak is June, that means those are homes that went under contract in April or May, right? So actually the absolute best time to sell your home is April or May. And the best time to buy a home if you want to get the best deal is October or November. So right now, that's why we're talking about it. For home buyers, this is a big opportunity currently, and for sellers, this is a big thing to watch out for. Unless you really have to, you don't want to list your home right now. So we've talked about this one before, the seasonality of the market, but I really wanted to dive into the numbers this time around because we've talked about kind of what it's like to buy and what it's like to sell emotionally, procedurally during different times of the year, right? Are you gonna have multiple offers on every property that you try to buy? Are you gonna get multiple offers on your place? Or you're going to be doing a little bit more negotiating. So we've talked about that. Check out some of our other videos. Today, I really want to talk about the numbers. It can be 10, 15, or 20% different in terms of the price, the median price, depending on the time of year that you're buying. So it's a huge amount of money. Think about that. If you're about to go buy a $500,000 home, that home could be worth $425,000 in December. So I know your inbox is probably filled with price drop notifications from the major search portals right now. I know there's a lot of doom and gloom in the news right now. And some of that is justified. Interest rates are way up. It is definitely icing demand. But what it's also doing is preventing people from selling because a lot of people locked an interest rate sub 3% over the past year, 18 months or so. And if they were to move right now, it would mean they'd lose that interest rate and they'd have to go buy a home at probably double, at least double the interest rate if they were to buy right now. Okay, so that's not super appealing. You're starting to say, you know what, I would like a little bit more space, but turns out I can't afford it. Even if I spend more money on my monthly payment, I end up back in a home that's pretty similar to what I'm in right now. So that's preventing supply from rising as much as it should be, even though demand has dropped. So what we've gone from is this market fervor where there was a ton of demand and a pretty good amount of new listings hitting the market. It never really built up a lot of supply because there was so much demand. It just kept going down, down, down. The inventory of homes kept decreasing. And we flipped now where we're in a market where demand is way down, okay, compared to at least 2020 and 2021. It's even below, in a lot of places, what it was prior to the pandemic. But at the same time, inventory hasn't come back up. And that, because there's still such a shortage of inventory, is keeping prices from falling. And it's going to continue to do that. In fact, most people are forecasting a 2 to 3% increase in home prices nationally over the next 12 months. They're not forecasting a drop. Now, the places where you are seeing prices legitimately drop are a lot of the boom towns, mostly out west. You've got your Austins, you've got your Boise, Idahos, places that really caught on fire during the pandemic. Those places, prices are legitimately dropping both seasonally and on a seasonally adjusted basis. And that's because they just went way up a lot more than we did in the Chicago area. And we've talked a lot about how Chicago is different than some of these markets in the past. So I just wanted to break that down a little bit more today. You're going to hear about the housing market you're going to hear about prices falling. You're going to see price drops in your inbox from your searches that you've got saved. But when it comes to Chicago, prices are actually still going up at a much slower rate, but they are still going up. And the reason is because the inventory still really hasn't recovered. And somewhat counterintuitively, it may not. We'll see. Sellers are going to start taking their homes off the market towards the end of Q4, so inventory will go down. And then we'll find out more in January, February, what that inventory is going to look like next year and whether the demand will be there to meet it. In the meantime, just keep an eye on those interest rates. As I record this, we're about to get another inflation number tomorrow. If inflation starts to cool off a little bit, that should be good news for mortgage interest rates. You should start to see those come down a little bit. If inflation is tough to tame, you may see continued high mortgage interest rates. So keep watching. We'll be back here in a month. Don't forget to subscribe so you get notifications. Give us a like if you liked what you see. And most importantly of all, I told you that there were some boom towns out west that we will see home prices fall. There are some markets, some cities and towns in Chicago where we're going to see home prices fall a little bit over the next year or two. To find out if yours is one of those, head on over to our website, like I said, fill out that form, name, email, and the neighborhood or town that you're interested in, and we will break it down for you. We'll do an analysis on that particular market, get you the information that you need. Thanks so much for watching, and we'll see you back here next month.